Hi everyone, so the next question we're going to look at is question 2 in the mock paper, which is on early year trade losses. Now, we've looked earlier in the year at what happens when we start a new business, how we figure out the dates that are reported in year 1 and year 2 and year 3 and going forward. And we've also figured out what happens when a business makes losses, how it can share that going backwards a bit or forwards a bit, and figuring out what goes on. But there are special rules for what somebody can do with the losses that they make in the first 3 years of a new business, because they would be employed, start a business, make a loss. And if they can't get past that 3-year period, they'll never make profits. So this is a special set of rules which allows those self-employed profits to go backwards against other income. So I'm in a job and I leave a job to set up a business, the business doesn't make any money. I can use those losses to go backwards when I was employed against that income for the first 3 years. After that, if your business is still making losses, close it, because it's not going to make anything. But it's designed to just help businesses get over that first period and give a special set of rules about what they can do in that first 3 years. So the question we have here says that Robert begins trading on the 1st of October 2019. That's when he starts. So he uses the 30th of the 9th as his accounting date. Now, in the first 2 years, he makes 62,000 loss and he makes 18,000 loss. And what we're figuring out is where can those losses be relieved and against what? And there's different rules for it. Now, the first thing we have to do is figure out which tax years these losses were incurred in. And we'll see why we have to do that in just a minute. But we have to use those rules that we spoke about for when we've got accounting dates and tax years at different periods. So we said First of October 19 is the year he opens. That is in tax year 2019-20. 6th of April 2019 to the 5th of April 2020. So that's the first year that he will record some losses for this period. Now, that's year 1. And in year 1, we always report start to the 5th of April. So from the 1st of October, November, December, January, February, March, 6 months, because end of March, 31st to 5th of April is the same thing. The first set of accounts is a 62,000 loss, and we've already said 6/12 of those will be related to this year. So in that year, £31,000 of losses can be declared on that tax return. Because it's early years trade losses, we can go back to the previous 3 tax years. So this can be shared in 16, 17, 17, 18, and 18, 19. That's where that can go. We'll come in the second part of the question to how we do that. But at this point, we're just working out these losses, how do they attach to each tax year and where can they go from there? So the first year is that period, this is the working, this is the loss, and this is the years that it can go in. And we just move forward. So the next tax year will be this, but as I said when we were doing these, you should go straight forward to year 3, because by the time we get to year 3, we are in current year basis. That is our current year basis, so the losses there are 18,000. And they can be shared in 18, 19, 19, 20, and 2021. It's this second year where even when we're starting a new business making profits, it's slightly more complicated, where we have that decision tree of, is there a set of financial statements? Are they 12 months long? Blah, 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 blah. Here, we do the first 12 months of trade minus what was recorded in year 1. So the second year is going to be the first 12 months of trade. And that is 62,000. And we will minus any overlap, which is this. 31,000 of that has already been recorded. It cannot be recorded again. You do not have overlaps in losses. You have them in profits, but not losses. So this 62,000 minus whatever we have already claimed in here gives us 31,000, and that can be shared in 17, 18, 18, 19, and 19, 20, and let's just put a line through that. So what we've done here is we've figured out these 2 years' losses will be spread over these 3 tax years at this amount. Now it can go back 3 years from this date. So this year can go back further than this year. But that's the first part of the question, being able to split this between these different years. I'm going to switch boards over so that we can start afresh on actually figuring out how we will relieve that. So, it says in the question, can we do the tax years 16, 17 to 19, 20. So we will do 16, 17, 17, 18, 18, 19, 19, 20. Now, 1920, as you remember, is the first year that we traded. But we made a loss, so the trading profits were 0. What we have to look at now is that income from employment from the job before we set this business up, and that details is in the question. 22,500 27,450 37,50 and 13,500. We can now give our total income, which is in fact the same because there's been no profits yet. And now we have to use this to figure out what losses we can claim against these years. So the way we do this is the first year that we generated losses was 2019-20. And the loss in that year was 31,000. And it can go back to 16-17, 17-18 and 18-19. So we have 31,000, we can go back to 16-17, but we only have 22,500. So that is all going to be relieved there. And we have 8,500 that we have not used, and it can go forward 1 year. By the time we've done that, all 31,000 of those losses from that year have been relieved. If we had gone to 0, 0, 0 and had some left, we wouldn't be able to use them because we can't go any further forward. Next, we look at the next year, which was 2021. And the loss in that year again was 31,000. Now in this year here, we've already relieved 8,500 of this, and that means that we have 18,950 left, and that's less than the 31. So this can go here, and that leaves us with 12,050 that we haven't used. So it can go forward. And that is all of this done. So we've done all of this in here and here, and we've done all of this in here and here. And in that last year, we have 18,000. Now here, we've already relieved 12,050 of this. That leaves us 18,750. We only have 18,000 of loss. So it all needs to go in here. We have now used this in here, and all 3 years have been relieved. And if you add this up over here, this will come to 31, 31, and 18, which was what we said was the maximum amount. Now that we've made this surrender, we can redo our taxable profits, which is nil, nil, 713,500. And we can go back and retrospectively claim the tax back on a recalculation. So any tax paid here, we can ask for a refund because we actually made no money. Any tax paid here, we can claim a refund because we didn't make any money. Tax we paid here, we can claim it all back because the profits that are left are less than the personal allowance. So that would still go down to zero. And in the final year, 13,500, 12,500 personal allowance of that, £1,000 left over, they would have £200 of tax to pay in this year. So the question's done in 2 stages. The first one is breaking out those losses into the different tax years that they would be reported in, which is similar to how we do profits on income tax basis periods, but slightly different because you can't have overlaps. Then once you've done that, you go back and you allocate them to each year in which they're able to be in to reassess those taxable profits. Again, if you've got any questions, email me about it. Work through this, look at the question, look at the answer, make sure you understand how they've come together. And see you in the next video.